very important. So now the next sources of finance that we have to calculate is what? The redeemable bond, right? Now, this 7% means the interest rate on that particular what? On that particular bond, and is for 6 years. Don't forget that redeemable debts are debt that can be redeemed at a specific period of time. The date of maturity of this bond is what? Is 6 years. Now, let's quickly go to the paragraph that talk about, you can see that yesterday we were able to establish the preference shares as the cost of debt. Now, this is for redeemable debt. This part is for what? Is for redeemable what? Is for redeemable debt. Now, what is this redeemable debt? You can see that, you can see from the question, we're given that 7% bond are redeemable at a premium to their nominal value of what? 1,000 per bond. Class, I've mentioned this in our previous class that when there is a redemption means that the face value at the end of the period, what you will pay, your principal, just like a principal. Now, if your redemption is at premium, and the nominal value is 1,000, what it means is that premium means above that nominal value. Premium means it will be 5% above the 1,000. Now, I have explained in our last class that redeemable can be at premium, at par, or at discount. Now, what you need to do is that the nominal value of a redeemable debt, is in this question is 1,000 plus, and the premium is 5%, which means that the premium will be 5% above the nominal value, which means that we are adding the 5% to the what? To the nominal value. But if it is at discount, you have to subtract 5% from the 1,000 naira, so that you will now have about 95 thereabout, right? Now, if it is at par, it will just be 100. If it is at what? If it has par, it will be. So the redemption could be at a premium, at a discount, or at par. So now in this question now, the redemption, right? Redemption means the principal will be above the market price, which means that you have to add 5% to your nominal value. That it means what is above. That is the premium there. Now you can see from the continuation of the question, you can see it here that, and have an S market interest, which means that the interest has been paid, which is 104 naira 50 kobo per bond. Per what? Per bond, which means that the interest has been paid. If it is an S interest, remember, it means that the interest has what? Has been paid. Is that also? So now let's quickly go and calculate the cost for, now when we want to calculate the cost of a redeemable debt. So what do we use to calculate anything that is redeemable? So what do we use to calculate the cost of redeemable debt? So can anyone help us with that? So what are we going to use to calculate the cost of redeemable debt? Please unmute your mic. So what do we use to calculate the cost of redeemable debt?
Is IRR.
Okay, internal rate of return. Okay,
Yes.
thank you. Thank you. Rachel, well done. Thank you too. So you can see, and you see, sometimes in a question, preference share can be redeemable. If they just mention to you that this particular debt is redeemable, what you need to use is to use internal rate of. Why do you have to use internal rate of return? Because you want to know the present value of that debt, right? You want to know the present value of that what? That particular debt. Is that not so? Now, you use internal rate of return. Class, when you are to determine the cost of redeemable debt using internal rate of return, please unmute your mic. What are the ingredients you will use to cook the soup? What are the ingredients? Redeemable.
Make use of the market value,
Okay, I'm
the
coming.
interest rate,
Okay, who is that?
tax
Who is
on
that?
interest.
Let me see. Who is that? Oh, Adiola. Okay, Okay, well done. So, what are the ingredients? I'm listening. Continue. What are the ingredients you need to cook the soup?
So you need the
Okay, we
market
need the
value.
market value, the
Okay,
annual
you need.
interest rate, and the tax.
Oh,
The
okay, thank
tax.
you. Thank you. You can see these are the things you will need to look for in your question, right? Now, you look for the market value as interest for redeemable debt, right? Two, what is the interest rate? Interest rate. Three, what is the numbers of years, right? Four, what is the redemption value, right? Market value less interest. Then last is what? The tax rates class. The what? The tax what? The tax rate class. Now, let's quickly go back to the question and identify our interest rate so that we can move further, right? Now, the interest rate is 7% being placed on the bond. Establish that, right? And it is at what? The redemption is at premium, which will be, we will add 5% to our nominal value so that it will be above it. It will be 5% above it. Class, it will be 5% above the 1,000 naira. We are adding 5,000, 5% to our 1,000 naira per pound. Now, what is the interest rate? For those who have the question, please take note of this so that you just give me the figure. The interest rate is 7%. The nominal value is 1,000. The premium is 5%. Please take note. The S interest market value, please, 104.50. Have you take note of that? Then the tax rate is 30%. Please take note. You give me all those figures. So, and that is why it is good to get the material so that we will not be going back and forth like this, right? So now, the market value S interest. So what is the market value S interest, class? Market value interest is what? 104 point what?
Five.
0.5. Okay. So this market value S interest, this is the market value S interest. So this market value S interest will be at your year zero. We'll get there. This market value S interest is just like your investment. Will be at your what? Will be at the year zero. Now, we'll leave that part. Is that not so? Now, the interest rate is about how many percent? Let me put it as year zero. Let me be putting it as year zero. Will be at your year zero, right? Will be at what? At year zero. Okay. Now, the interest rate is about how many percent? The interest rate. Interest rate is what? 7%.
7%.
7%. Now, class, how do we convert this 7% to Naira? How do we convert this 7% to Naira? How do we do that? If you want to convert this 7% to Naira, so what do we do? Class, who can try?
We divide by 100, sir.
Okay, we say 7/100. And what?
0.07.
Okay.
100 by 3,000. The value of the share.
Okay.
Value of the grapes.
Okay. Now, thank you. So when you want to determine the Naira value of this, right, what you need to do is that just do your 7 divided by 100 times, multiply it by the nominal value of the bond. Multiply it by the nominal value of the bond. If the nominal value of the bond is 100 naira, multiply it by 100 naira. If it is 1,000, multiply it by 1,000. In this question, we are given that the nominal value of the bond is 1,000. So you multiply it by what? By 1,000 naira. Now, by 1,000 naira, you can see that 7 times 1,000 will give us 7,000. 7,000 naira divided by 100 naira. What do we have? 7,000 divided by 100 naira, we have what? So
70
what do we have?
naira.
What is the
70
interest
naira.
rate? 70 naira. You can see that the interest rate
70
is
naira.
70 naira. Why is it 70 naira? It's because the nominal value is 1,000. Class, don't forget this. When you want to change your interest rate, even if the interest rate is 10%, class, if the interest rate is 10%, it will be 10 over 100 times the nominal value, so that if the nominal value is 100, so that 100 can cancel 100, you will have 7 naira class. And that is, see, you will see some textbook, they will just give you 7%. They will just get 7%. You will now ask yourself, or 7 naira, you now ask yourself, how did 7% becomes what? 7% becomes what? 7 naira, right? It is 7 divided by 100 times the nominal. Please note, are you writing? Are you writing? The interest rate equals to 7 over 100 times the nominal value of that particular what? Bond. Right? Are we together? So that is 70 naira. And it is for how many years? For how many years? It is for 6 years, right? So therefore, the interest will be from year 1 to year 6. Is that not so? Class, are we together? The interest will be from year 1 to year 6. Is that not so? 6 years. Class, are we together, please? Class, are we still together, please? Hello?
Yes, sir.
Okay, thank you. Now, if that is established, the redemption, they said the redemption is the nominal value, which is 1,000. But we were told that the redemption is at premium. There will be a premium of 5%, which will be above the nominal value. You will add 5% to the nominal value of 1,000. Okay, you don't know how to unmute your mic. Okay, I'm coming. So the nominal value, no, you are muted already. You're muted. So the nominal value is 1,000. You have to add the premium to it. So therefore, you cannot have redemption, the premium, plus the nominal value, right? Now, what is the premium? The premium is how many percent? 5%. Class, what is the premium? The premium is what? 5%. Is that not so? Which is 5 divided by 100. Is that not so? What is the nominal value? The nominal value is 1,000. 1,000, class. 1,000, right? Now, equals to this. Don't forget that you need to change your 5% to naira. Is that not so? So that you can add it. Don't forget. You need to change this. You need to change this 5% times the nominal value, which is what? Which is 1,000. Which is what? The 1,000 naira. Right? Don't forget, 5 divided by 100 times the nominal value, so that you can have naira. Because if you don't do it like that, you end up having 5%. Is that not so? You end up having 5%. There are different ways you can use, right? You can say, oh, 105. You can say, oh, 100 plus 5. That is 1.05, right? Times the 1,000. You get your answer. Is that not so? So whichever one, will do it again, so that you will see whichever method you want to use, you can use it, right? So 5 over 100 times the 1,000, so that you get the naira value, so that you can be able to add. Premium means you are adding it, right? You are adding it. So when you divide this, you have 50 naira, right? Now, 1,000 plus 50 naira, that is 150. Is that not so? 1,050. Is that not so, class? Is that not so? Am I correct?
Yes, sir.
Yes, sir.
Okay, 1,050, right? That is the redemption, right? Or you could say, now, test something. Let's test something together now, right? So, or you say 5% plus 100%, right? Times 1,000 naira. What do you have? 1,000 naira. What do you have? Class, what do you have? 5% plus 100%. What do you have, class? Figure.
1,050 naira.
Thank you. 1,050 naira. You can see, I'm just breaking it down to to see that the worst case scenario that you could see, right? That is why I decided to bring this question adopted from one of the ACCA past questions, right? So anyhow that you want it to be, just understand SFM, right? Don't forget at the beginning of our lecture, you need to understand it so that when you see the worst case scenario, when the available when the desirable is not available, the available becomes the desirable. That is what it means, class, right? At the end of SFM class, you should be able to analyze stocks in the what, in the Nigeria Stock Exchange or the London Stock Exchange, or you should be able to do an analysis on a stock, because that is what it's meant for, right? Now, we will get there under portfolio theory. Now, what will be the tax rate? The tax rate is given as how many percent? 30% in the question. Is given as what? 30%. Is given as what? 30% in the question. Now, class, this redemption will be at the last year, which is what? The 6th year. The 6th what? The 6th year, class, which will be at the what? The 6th what? At the 6th what? At the 6th year. Can you see it? Will be at the what? At the 6th year. Don't forget that we will pay interest. There will be a tax relief on interest. Is that also? There will be a tax relief on the interest. So let me create that column so that we will not mix it. Okay, tax relief, right? Tax relief. Or should okay, when we want to do the IRR, let me include it. When we want to do the IRR, I will include it later. So, do you understand? There are two ways you can do these things. So, I will give you another method you will use, right? There is so many things you can do in SFN, right? It's just madness. Now, the next thing is that let's put our internal rate of return. Now, how do we calculate our internal rate of return? The positive MPV and negative MPV. Is that also the positive and negative what? MPV. So we have this will be years, right? This will be items, right? This will be cash flow, right? CF. Is that also? So this will be the DCF, right? So this will be the present value. Class, are we still together, please? Are we still together? Unmute your mic. Are we together?
Yes, we are together.
Okay. Now, if this is established here, right? The internal rate of return, we want to calculate the internal rate of return, right? Now, we start. The first thing is at year 0, which is the market value S interest. Don't forget that the market value S interest is per bond, is per 1, right? Year 0, right? What is the items? Market value S interest. S interest. Okay. S interest, right? So what is the cash flow? The cash flow is 104.50. So which DCF are we using? Because if you want to get positive, so how do we do it? Which DCF are we using? Should we use 4 first so that we can use, if you use 4, you can use 10 or 15. Is that not so? You can use 10 or 15. So, because we need to get the positive MPV as well as the what? As well as the negative MPV, right? So, we can decide to use 5. The first, we can decide to use 5 is try and error. IRR is just try and error method. So, 5%, right? So, this will be 0. This will be 1, right? And this will be bracket 104.50, right? 104.50. So if this is established, what is the next step? Your interest rate. Of course, you will pay interest for 6 years. Of course, you will pay interest for how many years, class? For 6 years. Let me bring this thing down. You pay interest for 6 years. interest, right? From year 1 to 6. You pay interest from year 1 to 6. At the last year, right? You know, when you borrow money from me now, for instance, you borrow 15 naira. As you borrow that 15 naira, you will pay interest from year 1 to year 6. Now, in that last year, you will pay the interest. You've already paid the interest from year 1 to year 6. You will now add the principal, which is the redemption amount, right? Now, if that is established, the interest rate that we calculated, the interest rate, what is the interest rate? It's 17 naira. The interest rate is what? It's 17 naira. Interest rate, interest rate, interest is 17 naira, right? It's 17 naira. If this is the interest, please use your annuity figure or calculator. How do we determine? Someone should give me the formula for calculating annuity. Formula for calculating annuity, class. Class, so are we still together like this?
Divided by R.
Okay, good. Divided by R. Divided by R. Okay, that's fine. So this is the annuity formula. Use the annuity formula from year 1 to 6. What is the DCF, class? I'm waiting. What is the DCF? Oh, equals to 1 minus open bracket 1 plus 0.05, which is the DCF. The numbers of years is 6 raised to power 6, then divided by R. What do you have?
0.0566.
Coming, just a minute. Divided by the R, which is 0.005, right? Okay. So our final figure is equals to what? Sorry, equals to what? Zero. What is the figure, please?
5.076.
You got 5.006. Hey. Okay. Oh, 5 point. Someone say she got 5.006. Please give me figure. Uh, Figure, please, so that we can move, please. Please confirm now. Confirm this thing. It's not difficult.
0.76. 5.0.76.
5.0.
76.
Okay, don't forget that this is different, right? Okay, now let's do it together. 1.0.05 raised to power 1.05 raised to power of 1.05 1.05 raised to power 6, right? Raised to power 6. Is that not so? Divided by 0.05, then you minus your 1. Is that not so? More figure, so Mona give me figure. 0.05.
That is not raised to power minus 6.
Okay, thank you. Raised to power minus 6. Raised to power minus 6, thank you. Thank you. Raised to power minus 6, that is the annuity formula. Class, what do we have? Raised to power minus 6. Class, what do we have? Figure.
5.075.
Okay,
076.
okay, 5 point,
0.076.
okay, 006, right?
0.76.
0.76.
Okay, 76, okay. Okay. This order should confirm that. So, here we can have 5.076. So multiply, please multiply by 17 naira. What do you have? Multiply it by 17 naira. What do you have? Multiply it by 17 naira. What do you have? If you multiply it by 17 naira, what do you have, class?
355.
Okay, 355. The next is, don't forget that you will pay, there will be a tax relief on the interest rate. On the what? On the interest rate. So because you pay interest from year 1 to 6, definitely there will be a tax relief on the interest from year 1 to 6. So tax relief. So how do we do that? Then you say, how many percent is it? 30%, Abi? So 30%, 30% multiplied by the interest rate times, what is the interest rate? 70 naira. So what is the relief? What do we have, class? Class, what do we have?
21.
Quickly. What do we have? What is the figure, please? Figure.
21, sir.
Okay, 21. So this will be deducted from the interest rate so that it will reduce the interest. Tax relief means that something that will reduce the interest. It's 21, right? 21. Okay. So the same DCF, 5.076. So when you multiply, what do you have? Multiply, what do you have? Quickly, class. Multiply, what do you have? Please,
107.
107. The tax relief will reduce the interest, right? Now let me put it as tax relief on interest. So I'll get it like this. So if that is established, then the last one is the redemption. You pay interest from year 1 to 6. At that 6 years, you will add the principal as well. That is the redemption value. So we can have redemption, right? Redemption. So this is what I'm trying to explain in our previous class. You can see it. So redemption, what do we have as the redemption? 1050 as the redemption, right? We have 1050 as the redemption. So now use your DCF. This one is not from year 1 to 6, so your principal is not from year 1 to 6. So what is the DCF? Use your DCF formula. What is the DCF formula? Equals to 1 divided by, right? What is the formula? 1 divided by 1 plus R, right? 1 plus R, close bracket, raised to power of n. So do it. What do you have? You use the DCF because it is just for 6 years. Class, quickly. What do you have?
0.76. 746.
0.746.
0 point,
746.
okay, 746. Okay. Now, multiply, what do you have? Multiply, what do you have?
789.3.
What do we have?
780.3.
783.3, right?
Yes, sir.
Okay, so what is the present value? What is the present value figure? Subtract it and add and subtract. What is the present value, class? Final figure, present value, subtract and add. What do you have? What do you have? Quickly. What is your final figure? I'm waiting. Is it
926.8.
20?
926.8.
926.8. Is it positive or negative?
Positive.
Okay. You have positive 926. 926, right? Positive, sorry. So we need to get the negative MPV as well. Negative MPV. So you can copy all these things down. It's okay. Coming. Can copy all these things. Then it's trial and error, right? So negative MPV. So how do we determine the negative MPV? So we need to change the percentage, right? The percentage. So which percentage should we use? This is positive MPV. So quickly, what is the negative MPV? So which percentage should we use? Class, I'm waiting. Oh, which percentage? Hello?
10.
10. Okay. You try 10. Try and error. So this from interest rate from year 1 to 6 will be different. We have different here. From year 1 to 6 will still be different. And this we have different things here. So what do we have? Just do it the way we did the first one, right? The way we calculate using the annuity. The way we calculate using the annuity formula. Please get the interest. What do we have? What is the interest?
The DCF is 4.355.
Okay, the first one, Abi.
DCF for interest.
Okay, the DCF for interest is what? 4 point.
4.355.
Okay, 4.355. 4.355. So what about this? When you multiply, what do you have? When you multiply it, what do you have? If you multiply it, what do you have? 4.355 times 70, what do you have? Class.
304.85.
Okay. 308, Abi?
4.85.
308.
304.85.
Okay, 4.85. Okay. So what do we have here? This one will still be the same interest rates, the DCF using annuity. So what do we have here?
91.46.
91. Oh, 91, that is higher. That is high. 91 plus 304. 91. The 304 is above. We need to get negative. The 304 is above the market value S interest. You can see it now. The 304 is above this, but we want to get negative. Anything we want to get should be below 104. It should be below 104. What should we use? Use try 20%. If you use 20%, what do you have? I think from the question, I later see it that I wrote something that is wrong, but I just needed to. We just need to continue. What do we have? Okay. So that we will not waste much of our time. There is a okay. Let's quickly correct something here from the question, please, so that we will not waste much of our time. The nominal value is supposed to be 100, not 1000. Class, are you with me? The nominal value is supposed to be 100. Let's correct that. Let's see what we have. So the nominal value is supposed to be 100, not on 1000. Because now, if we try to use now from this, yeah, my apologies for that. Okay. If you use 20%, what is your DCF? Because this 304 is higher than 104, right? It's higher. And it's from the question actually.
3.326.
Okay, 3.326. Multiply it by 70, what do you have? I just want to get value below 104. If we didn't get the value below 104, we'll go and use nominal value as 100, then we'll move on.
232.82.
No. Okay, okay. Now is that 1000 that they gave us? So let's change it, class, please. Apologies for that. think it's supposed to be 100. I saw it last night. I was like, oh, but fine. So I was thinking it will go. So it's supposed to be 100 class. So the nominal value of the bond is redeemable bond is 100 class. The nominal value is 100, not 1000. So we'll come back to this side and change the nominal value to 100. I'm coming. Where is it? Okay. So the nominal value, don't forget that we say we multiply by the nominal value class. So you get, when you multiply this, you have your 7 naira class. You have your 7 naira. Then you multiply this one by the nominal value again. Then this should be the nominal value as this. Class, are we still together, please? This should be 105. So this also should be 105. I'm coming? 105. Okay, thank you. So the nominal value should be 100. Okay, Faith. Faith, unmute your mic. Faith. Okay, do you have anyone that have question? Please, if you have question, kindly unmute your mic. Like I said, the nominal value of the redeemable debt is supposed to be 100, not 1000 naira. So that is why we could not get the negative MPV. Is from that side. And I've corrected it here that, look at it here, I've corrected it as, you can see 5 over 100 times the nominal value, which is 100, plus the nominal value, right, which is 105. The same thing, either you use this or you use this, right? And that is why we did not, is one of the reasons why we could not get it. So we need to change all these things from the positive MPV. My apologies for that, please. Sorry. So this should be 7, right? Then this should be 105 class. This should be 105. So please multiply again and give me figure from this part. Quickly, please multiply again and give me figure. Quickly. This should not waste our time, please. It's just very simple. It's not, if not because of that error. Class, are we still together, please? I need to confirm that. Are we still together? Class, are we still together, please?
Yes, sir.
Okay. Please
Yes.
confirm.
Sir,
Okay. Thank you. You can.
that has to leave on interest. Supposed to be
Yes.
30% multiplied by 7.
Okay, 7
For
naira.
interest is
Okay.
36.
Okay, I'm coming. Okay, so what do we have? Okay, please. What do we have here? Let's change this one as well.
You have 2.1.
Okay, for here, you're on the tax relief, Abi?
Yes, sir.
2.1. Thank you.
2.1.
Okay. So please multiply this again. Let's see quickly. We don't have time. Quickly.
36.
What do we have? 26.
36.
Okay.
36.
Okay, 36. Okay, 36. Okay, so what do we have here?
10.6.
11.
11, approximately 11.
11. Okay, 11.
Yes.
Okay. So please multiply this. What do we have here? What do we have? My apologies for that, please. I'm sorry. I saw it last night, but I
78.
thought it will
78.
work. 78. Thank you. I was thinking it will work, but unfortunately we just have to change it. Please, you can change it on the handout, on the material, that the nominal value is 100 of the redeemable bond, not 1000. Thank you so much. Thank you. So please, what do you have? Please, what do you have? Oh, thank God, there is light. Okay.
20.5.
What do we have? Sorry. Positive
20.5.
20.5. Is it positive?
20.5.
Positive?
Positive.
Positive. Okay, good.
Yes, sir.
Okay. Now, let's go for negative. So we need to come back to this side and adjust our negative. Are we using 5%? 7. Okay, let's use. Okay, use the 10%. Let's see what we have. This is 7.
Sorry, the 11 was added, right? It's supposed to be deducted.
What is that?
Yeah.
The
Okay,
tax
okay.
relief of 11
Yes.
was added by
Oh,
them. It's supposed to be
oh,
deducted. So the answer should be
oh,
9.5, I guess.
oh. Okay,
Yes,
9.5.
you're correct.
Okay, 9.5. Thank you. Thank you so much. Thank you. Okay, 9.5. Good. Next, what do I have? Please change this. Okay, this one is okay now. 10%. Please, the annuity from year 1 to 6. Please confirm that annuity.
The interest
Okay,
is 30.
is 30.
Yes, sir.
Coming. Is 30. Is 30. Okay, is 30. Okay, let's see. Okay, next, what do we have? 2.1 times 433. It's trial and error. Okay, quickly, class.
9. 9.
9.
What do we have?
9.
9. Okay, good.
Yes.
So the last, please. What is the DCF for 10%? 10% DCF.
0.564. 564.
0.564. Okay, please multiply. What do you have?
59.
What
59.
do you have?
59. 59.
Okay, 59. Okay, this should be minus.
Yes, sir.
Okay, okay. So what do you have here? Sorry. What do you have here? The last
59.
this thing. What do you have? Okay,
59.
Rachel. Rachel,
Minus
what do you have?
44.5.
Okay. What do you have? You say what? I didn't get
There we have
that.
59.
Yes, sir.
59.
For the first one.
59 there. The last one. Redemption 59.
Okay, 59. Okay.
Yes, sir.
Okay, for the first one, what happened?
The
Hello?
PV is minus 1.5. The PV, the present value is minus 1.5.
Oh, it's minus 1.5. Okay. Ah,
Yes.
now wow. What minus? Please confirm. Oh, figure. Please press your calculator. Minus 1.5.
1.5. Yes.
Ah, you add your inflow. Yes, now it's minus now. It's minus 36 plus 78. It's not even more than 104 already. It's not. It's not now. It's not up to that. It's not up to that. Plus 78. Okay. 114. So no, it should be plus now. It should be positive. Is it not supposed to be positive? Right? Let's see.
But
36
the,
plus 78. I'm coming. 36 plus 36 plus 78 is 114.
114.
So minus it from 104.45.
It's
That
negative,
is
sir. It's
okay, it's
negative.
negative. Okay, it's
Yes,
negative.
sir.
So
So you know
next.
this is DPF.
So okay, do we have positive here?
Let me check. We can't have positive.
No, we can't have
You need to
positive.
bring down our DCF.
Yes, yes, yes. We need to bring down our DCF. Thank you for that. So that means that the higher the DCF, the negative your MPV becomes. Then the lower your DCF,
The
the
higher.
positive. Yes, exactly. No, this is how it is. The lower your DCF, if you lower it to 4%, the higher it is. Is that not so? Then
Yes.
yes, the higher it is. So when you increase it, it will become a what? A negative. Please take note of that. So you can just use, when you want to get positive MPV, you can use, when you want to get positive MPV, use a percentage lower than the one you use for the negative MPV. So we have to bring our 10% down. So if you want to use, let's use 2%. Let's bring it down to 2. Yeah, let's bring it down to 2%. You can see now. So it's because we are doing it together. Is that not so? Ideally, when we want to do it subsequently now, we will not need to do trial and error. We already know what we will use. We already know that 5% will give you negative
Positive.
MPV, 2% will give you negative MPV. Class, are we together?
Yes, sir.
Okay. 4 minutes. The class will end in 4 minutes. Okay. Okay. Please, when it is 2 minutes, let me know. Okay, quickly, give me this figure here. Give me the figure here. The DCF. Please don't forget how we do our DCF, please. Don't forget to, from year 1 to 6, you use annuity, right? You use annuity. So when it is 2 minutes, let me know, please, so that I can create another link, right?
So the DCF is 5.601.
Okay. 5 point what?
601. 5.6.
Okay, 5.6. Okay, what do we have here?
39.2.
What do we have? What do we have? Sorry.
39.2.
Okay, 39.2.
39.2.
Okay,
39.2.
thank you. Okay, thank you. So what do we have here? Please quickly change it
No,
in your
that is
material.
for the
You say?
39.2 for the PV. It's for the present value for the interest.
Okay. 39.2. Okay. 39.2. Okay. Quickly, class. Are we there?
Yes, sir.
Okay. So year 1 to 6, you get your annuity. We already have your annuity. Just okay, this one is still 5.6 now. It's still 5.6 since it's still the same this thing. So what do we have, class? Quickly,
Negative
please
12.
what is the present value?
11.76.
You
12.
say?
Negative 12.
11.76. 12.
The- I don't get to. I didn't understand.
The
Hello.
present
Minus
value
12
for
is the
tax
PV.
relief is 12.
Wait, I'm coming. Rachel, the present value of what
For tax relief
is what?
is 12.
Is
Minus
12.
12. Minus 12.
Okay, minus 12. Thank you. Interesting. Thank you. Minus 12. Okay. So let me quickly create another link, right? We need to complete this question, right? We'll complete it. We'll complete this question, then I will give you assignments. So I'll create the link and send to the platform shortly. So thank you. Please ensure you join us so that we'll finish this question up, then we move. Please, it's very important. Give me some minutes. Let me create the link.